What's up, guys? Here it is Wednesday, February 5th. Had some beautiful weather out, and now we're looking at the stock market. We've had a crazy few last weeks. In the last 3 weeks, we had Trump take office, which was, of course, its own, set of market conditions there. I think that was ultimately for the best. The market sentiment was generally positive there. The following week, we had DeepSeek come out. This shattered, really rattled the cages on a lot of things here. So that caused a huge market shakeup. So that was something that happened 2 weeks ago, basically last week. And then this week we had tariffs. We had tariffs come out. So that was for Mexico, China, and Canada. Those are the three countries affected. So each week we've had some major thing happen. And the US is, I mean, by GDP, way larger than any other country. So it's not just us that feels these things when they happen. Me living in America, being here, being born here, sometimes I feel like, oh, well, it's just this. No, it's not. I mean, this stuff that happens in the US affects worldwide. So anyway, all that to say, we've had a lot of volatility lately, from Trump taking office to DeepSeek coming out, which was basically like an AI made in China that was significantly cheaper and faster and had the same quality as a lot of these large U.S. companies. Because U.S. is really leading the way with AI. It truly is. And it's kind of like a race now, just like we had in the, what was that, 40s, 50s? I wasn't around yet when, it was that race, the space race. And it was like the U.S. and there was, Russia had Sputnik, and it was kind of like that race to space. And now it's that same way for AI, through different generations in history. We've had these races. And it's like, gold. There was that gold rush in the 1800s. And somebody said this, and it was so smart. It's like, in the time of the gold rush, be the one that's selling the axes. Because it's like, hey, look, everybody's going to go to you. You have like a surefire way to make money, and people may or may not find gold, but they're going to buy those axes to go find it. Be the one selling those axes in the gold rush. So I always try to think of that in these crazy times like we're living in now, that just history repeating itself in a different version. So anyway, I moved since we last had a video here. Moved all my money in Schwab. I had that TD Ameritrade for about 12 years, really good, and then it was bought by Schwab. It was pretty good at that point, and continued to invest there and have it there. And then about a week ago, I moved it over to Robinhood. So it's now in Robinhood. I have my Robinhood original and my Schwab together, and so that's what brings us to our current portfolio, 60,600 or so. That it's at right now. So that's what we're looking at today. We'll take a look at the current portfolio. We're gonna make sure this video doesn't drag on too long. I got a drink here. Get your drink. Fiance got these. I don't know what they are. Raspberry something soda, but pretty good stuff. So we'll jump in here. Take a look at this. Robinhood makes it super easy. I'm actually not as familiar with using this on the laptop as I am the phone. I do all my trades from the phone, generally speaking. Laptop, I'm not as familiar with, but jump right in here. Let's see if we can go to, a good investing page. There's different ways to look at this. I kind of want to see it, from a good level here. So bear with me as we kind of navigate this. There's a good way to do it, and I think it's on this page here. Again, I usually use the app. I'm not nearly as familiar on the laptop here, but you can kind of look through here and see some different options. I think it's maybe investing, actually. We're on the investing, so it's definitely not that. Let me see if I can find it. I had it pulled up just a minute ago. Okay, here we go. We're going to jump right into it. So 60,000 right out, we're sitting at. We have 98% stocks. This is what's considered an aggressive portfolio. Okay. I'm in my 30s, and I'm going to tell you what, I'm going aggressive, just like I did in all my 20s, and I will all through my 30s and my 40s. Now, if you're in your 50s and 60s and you're like, hey, look, I want more of a moderate risk. I want something where I get 5% annually. This is not for you. I'm going to go ahead and tell you, it is not. This is for those that want to risk some money and make some money. Last year in two different portfolios, I made 55% in one portfolio I made over 80% in another portfolio. That was almost all in tech stocks. So if you want to get into that, you want to make some money, ride with me, do some of these trades. It's you can lose some money too. So I don't want to downplay that. That's absolutely something that also happens that, happens to me. And hey, that's okay. It's part of it, part of the ride. So got about 98% stocks, 1% crypto. If you look at it, you can kind of see that, 1% cash right now sitting at. Robinhood Gold, I get like 5% or 4% maybe on uninvested cash. I try not to have much cash sitting around. Put that money to work for you. It's your soldier. Make it be a good slave for you. Probably shouldn't say that word. A good worker for you. There's a better word. Okay. NVIDIA, we'll jump right in here. We've got 100 shares of NVIDIA. Really volatile stock, but really good. Huge potential there. Massive chip maker. 2 trillion, maybe $2 or $3 trillion company now, very large. Apple, I think, is like a $4 trillion company. 42 shares there. Really good growth stock to have just long term. Alphabet Class C, this is Google. 56 shares of that. Always recommend getting Google. It's actually down right now. As of today, it's down like 7%. So if you want to get in, now is a good time. We're sitting at $193 a share. Anytime it's under 200, I go ahead and buy a little bit. So bought some this morning on that. Palantir, 45 shares. That's really high right now. I don't know if I suggest getting into that. It's high. It's very high. A lot higher than it has been. It could hold. It could just keep breaking through new levels like Nvidia did last year. But it's a very volatile stock, so I would kind of hold on that. If you have it, hold it. If you're thinking about it, kind of give it some time. I wouldn't jump right in there. Microsoft, great growth stock long term. Always good to get in that. They pay dividends too. Amazon, really good stock. Got 17 shares there. Berkshire Hathaway, owned and managed by Warren Buffett, the Oracle of Omaha, the greatest stock investor who ever lived. They said he's old. That dude's older than dirt. He's like in his 90s now. He is still kicking, going strong. He still goes to McDonald's. He has a gold card, and he gets free McDonald's for life. I don't know why I think that's so funny, but he'll go there and he'll just ride through the drive-through with his 10-year-old Mercedes and just get McDonald's in the morning. He didn't care. He still lives in the same house he bought, his first house. He's been there like 70 years. That's so funny. He's worth, I don't know how many billion. I don't know, like over 100, I think. But yeah, he doesn't want to blow that money. Berkshire Hathaway's for those. Stock market. Okay. Vanguard is a really good one. Great ETF to get into. I think it's an ETF, exchange traded fund. That's a really good one to get into. So I'll just pick one of those up every so often just to kind of have a safe hedge. Again, I'm a very aggressive investor. Okay. So I'm in it for the long haul, but I'm going to make some risky bets. And that's how you win. That's how it's done. But you got to have something to kind of, have as a base for even when things don't go well, when, AI, has a massive shakeup like it's had the last week or so. I was sure glad to have some of those surefire bets like Berkshire Hathaway, HTA, Waste Management. None of those are very sexy, not very cool, but I'll tell you what, they're pillars. Oracle, another cool techie one. Robinhood. This is what we're using. This is the actual stock ticker hood for Robinhood, the whole brokerage. Been around for like maybe 6 years now. Really come a long way. Robinhood, if you don't know this, was actually the one a long time ago, parents' generation. They used to have to bring money to stockbrokers, like financial advisors, and be like, "Hey, can you put this in the market?" And so the stockbroker, like the financial advisor, would make money, and then the brokerage would make money, like investing it. So you bring them 1,000, you're only investing like 800, and like there's no like logging on and checking your stuff. You get like mailed copies of your portfolio. You're not like trading it daily like that. Well, fast forward to today, that's all different. Robinhood's the one who actually introduced trade-free commissions. Commission-free trades is what I should say. I got that backwards. Commission-free trades. So whereas the big guys, Schwab and Fidelity, and I don't know, the whole list of them. There's a whole bunch of them out there. They were charging. You pay like $7 to $10 a trade. Buy, you're paying $7 a trade. Sell, you're paying $7 to $10 a trade. every single time. So you did as few as possible. Robinhood changed that and said, hey, look, nope, free, free, free. They changed that, and afterward, the big guys had to follow suit. So Robinhood, just like the classical Robin Hood character, steal from the rich and give to the needy. They really came in clutch there, built their platform. They really geared a lot toward, in beginner investors, but they're beyond that now. They're significantly beyond that. They're FDIC insured up to 2.5 mil, so I feel comfortable there. One of the guys I followed has portfolio over 4 mil, and he's got it all in Robinhood. So I mean, he's comfortable with it. And anyway, so it's good. I got this in here, and I'm considering moving my retirement into here too. Tesla, I got some of that. I'm going to speed this up here. I'm talking too much. Walmart, good stock. Get into Walmart if you're not already. This looks like a huge potential. They're really going to focus on their online order market, and that'll be good coming up here. J.P. Morgan Chase, led by Jamie Dimon, really good CEO, really good at his job and knows what he's doing, and I think that'll be a good one coming up here. Alphabet Class A, I don't know what the difference is between this and Class C. I have like less than half a share in it. I'm not sure what that's about. KKR is like a investment firm that I got when Trump took office that night. I just started buying stuff that I thought would be good. SoFi is like banking for the future. It's like it's not your Wells Fargo or your U.S. Bank or one of those. It's all like digital, like mobile banking. So it's supposed to be the banking of the future. I got 20 shares, like $300, and it's supposed to be really good. It's been very volatile, up and down. I think right now it's basically broke even. I've lost $2 on the whole thing, but I'll hold it for a little bit, see what happens. SPY is the S&P 500, the tech version. So very. Why did we move? I don't know why that happened. The tech version. So that was very risky, but right now it's lost a little bit. But that's okay. And then last, Bitcoin ETF. It's called IBIT. It's owned by BlackRock, which is huge multi-trillion-dollar company, asset management company. They got their fingers in everything around the world now. They believe in Bitcoin. They started their own ETF. They know something we don't. I bought some shares in it because one, I believe in them, but two, like their stock, I think trades for right at about $1,000 a share right now. It's BLK is the name, that ticker for BlackRock. But anyway, that's a good one. I haven't bought any yet. I will. I'll have some soon. And then Doge, I got that for free for logging on to Robinhood on New Year's Eve or something. And then Bitcoin, I got like 6.006, so like 0.6% maybe or something. I don't know. Very small amount, $600 worth. That's it. So that's the portfolio. That's where we're sitting right now. Basically, in summary, Robinhood's really good. I moved a bunch of funds over that I had in Schwab, and so now that's consolidated there. Gonna do high risk stuff on here, so keep watching. We'll do some trades. I'm also getting into some shorts coming up here. Watching that, potentially shorting AMD, Advanced Micro Devices coming up. Their stock just keeps sinking, so I'm considering that. Then I'll short a short stock. I've been doing that, which is cool. SQQQ, which is basically an inverse leverage stock. And when the S&P 500 goes up, it goes down. So I'll short the short stock, basically betting on the market because it keeps going up. So I'm not sure how long that'll be around or last, but I'm going to keep doing it while I can and show you how to do that on some upcoming ones. But that's all I got for today. Drop a comment below if you liked the video, and we'll catch you guys on that next one.